You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskins, your host. As always, this week we are doing a suburb spotlight that we haven't done in over 5 years. We're going back to Melville, suburban heartland of the south. And there's one man we can speak to. We spoke to him in November 2019 about this suburb. It's Michael Jennings, now of Haven. How you going, mate?
Good, Trent. Thanks for having me on again. It's been some time.
Michael, it was episode 52. This is episode 308. And when you think about the things that have gone under the bridge in that time, we were just about to see the first COVID case open up in the world just after the episode we laid down at the end of November in 2019. What a story it's been in the world, but also more specifically in Melville since November 2019.
It's quite confronting, isn't it, when you put it that way? You kind of think about all the things that have happened in life in 5 years' time. You've highlighted it so many times on this show in terms of the growth that's happened in that period, but it takes a bit of a stretch to think back to end of 2019. What jumps out of my mind straight away is that 3 or 4 month period post that, when we didn't really know which way the world was going, and from a real estate perspective we were trying to piece it together and reassure people that the world wasn't going to collapse. But I certainly remember a few sales during that first 6 months of 2020 that we look back on and think, geez, wow, those guys got a good buy.
Well, fortune favours the brave, Michael, and not only were people probably a bit brave with this what is COVID back in early 2020, but also simply the market was green shoots. It was just starting to come back. We certainly weren't expecting to see major growth in that year. It would have been marginal, if anything. There wasn't a lot of capital around. Most people were in the negative equity space rather than what do I do with this equity? And that conversation around Melville's median house price at the time is one that, when you listen back to episode 52, is one that makes you fall off your chair, isn't it?
It is. I think back then we were looking at a median price of somewhere in the mid-sevens. As it stands today, we're at 1.2 million or just a smidgen above, which, yeah, it's not bad growth for 5 years, 100 grand a year for those that were lucky enough to own property at that time period or get into the market then.
So back then, what were you buying for that mid-700s in Melville? Give us a typical property.
Mid-sevens at that time would have bought you a rear 4x2 single level 10-year-old home. The same product now, you're looking at between that 1.2 to 1.35 mil, and that's for a single level home. There was even some development sites that were transacting around that time for possibly the high sevens, which now you're looking at anything from that 1.1 to 1.3 for a site that's not even in a great part of the suburb.
For me, this really tells that middle Perth story. Melville these days, you look at it and say, hey, median house price 1.2 mil. And when we look back 5 years ago, we said mid-700s, not accessible to everyone. Your response was not exactly a first home buyer suburb, pretty homogenised, Anglo-Saxon suburb. People not so different to me was the answer you gave us back in 2019. How has that progressed there? Has the price point started to push certain people out who haven't kept up with the market, maybe not being in the market themselves? Have we pegged from being just above median to now being probably third or fourth home sort of people?
Yeah, I think it has. And there are still young couples that are getting into the market within Melville, but they're buying a vastly different product that they would have been buying, obviously, 4, 5, 6 years ago. So I think on the whole, the buyer demographics probably matured. You're certainly seeing families that have got kids, 10, 13, 14 as opposed to 2 or 3, which is a bit of a telltale story of their journey in property ownership. One of the big changes we've seen with the demographic is that, and we may have spoken about this a little bit with the surrounding suburbs, is that the mature buyers from over the highway in Bigton, East Fremantle, Adderale have really flooded into Melville.
How so? Are they coming as people who couldn't make it into those suburbs, or people who were there and are downsizing into Melville with a bit of cash in hand?
I think people that were typically looking in those more affluent or perceived better suburbs close to the river have been pushed across to Melville, and the same things happened from Melville across to Willagee. And it's also linked clearly, and you would have heard this from lots of agents across Perth, is due to the lack of supply in each specific suburb. So not having options within a suburb that one's looking at is causing people to shift across. But I think when you look at the price point 5, 6 years ago in Adderale, where you might have been able to spend $1.5 million on a family property in walking distance to the river, now it's impossible, and as a result that product is more likely to be found in Melville.
Well, when we think about that price point, it's now in 2024 that you're pretty much paying 2019 Alfred Cove Adelaide prices, right? And the interest rate's higher. So it would be evident really that the profile of the buyer in terms of where's the money coming from, how did they get here, has to have changed because it's just less accessible. It's less accessible to live in Melville than it was really to probably get into Alfred Cove Adelaide 5 years ago. So it makes sense that you're either having downsizers or people who 5 years ago would have easily been walking into Adelaide go, well, look, Melville is my place. And then I have to ask the question, what does that do to the people who would have been expecting a Melville 5 years ago? They missed the boat. They've got that non-buyer's remorse that I talk about. You mentioned it earlier, and this is probably the biggest story in that inner south in Perth, in my opinion, is the suburb of Willoughby. Willoughby 5 years ago, you were buying a full block for 500 grand. You were buying brand new triplex for 500 grand. Now you're paying 850 grand for that triplex. You're paying mid ones for some of those blocks with a 4x2 on it. I would actually posit to you that the story of Willoughby, and I'll ask you why, but the story of Willoughby is actually far more volatile than the story of Melville.
Oh, absolutely. I think in dialogue with families and buyers and sellers for that matter through Melville, we often talk about Willoughby as the very local example of price fluctuations and rapid growth, which is not particularly healthy, I don't think, for any group of buyers or sellers. But to think that, you could have, I think last year it was, 15 properties over $1 million that sold within a 6-month period leading up to the back end of 2023 in Willoughby is really hard to fathom for people that may have been looking through there and those that are venturing from other suburbs. I guess Willoughby probably for me represents an example of one of the first suburbs in that southern corridor that started repeatedly breaking price records. And we've seen this across all suburbs. We've seen it in Palmyra, we've seen it in Adelaide, we've seen it very recently in Melville, where new price brackets are being achieved. And the reality is those new price brackets just become the norm. It's like building costs. They become the norm. They don't go back unless there's some cataclysmic change within the world that causes it.
It normalises, and I would suggest that there's a strong relationship here with your market in Melville, in that so many people who would have been your clients, your buyers in Melville a few years ago, have become Siobhan McCall's clients in Willoughby, to be frank. But I think that's a story there of gentrification converging with compromise. I think in historical years, people who maybe couldn't have afforded Melville for their own reasons probably just moved to maybe a Myrie or a Palmyra if they could, change their asset type. But I think since Willoughby's really gone through that new vogue of gentrifying, it's now become a viable option to people from Melville, whereas in the past, it was probably like never cross the highway.
Oh, absolutely. Oh, look, we've sold properties in Willoughby to buyers that were living even further afield in Mount Pleasant most recently. We just sold a unit on Cummins Street to a couple downsizing from a big family home in Rossmoyne. So they're not just jumping one suburb in terms of proximity, they're jumping multiple. And that's largely out of lack of choice, but also that Willoughby is offering a newer downsizing product.
What's the risk, though, that it prices itself out and really starts to become equal in pricing with Melville? Or is that impossible, given the fact that Melville is generally perceived as a better suburb than Willoughby? Willoughby will always trail Melville by that $100,000, $200,000 at least, and essentially it is limited by the growth Melville has. Does that make sense? Yeah,
it does make sense, and I think that's happened already, and I think Willoughby catches up to Melville in terms of price, and then Melville pushes on. Melville catches up to Adelaide, and then Adelaide pushes on.
It's that relationship we spoke about vividly 5 years ago in that insular circle.
Yeah. And the same, although I think that's been complicated by the lack of stock. And if you scratch below the surface and you take a character home, for example, from Palmyra, and you compare that to a character home on 400 square metres in Bicton, you might actually be paying more in Palmyra. It takes, I think, some level of a cycle, whether it's 6-9 months, of enough stock to come on and also buyers to realise that they're paying parity for suburbs across that juncture
that they never would have before. And this segues into that next point that I want to talk to, which is a big reason I wanted to talk to your suburb today, is I've been saying for a good couple of weeks, and for people who have been listening, they'll recognise this. I'm foreshadowing, I guess, a changing of the guard of where the buyer pressure comes in once interest rates start to drop. Right now, over the last 12 months really, people have been focusing on access, just getting a roof over their head for what they can afford, because what they can afford is a lot less than what their preferences, their amenity preferences are. So the theme of this year really has been access. The year before that was affordability. Next year, is going to be amenity. I think the second interest rates start dropping, that buyer pool stays the same in size. It's essentially a function of people who need a new home, immigrants, first home buyers, investors probably still growing as a poll too. But as interest rates drop, their preferences on amenity start to become a reality again. They start to go, hang on a sec, my serviceability now has gone from 1 mil to 1.2 mil. Maybe I can afford that place in Melville that I have given up on 3 months ago. I will start moving up the amenity curve again. So the buyer pressure in the area, let's call it Willagee to Melville, Myrie, Adelaide, is the same, but it starts to shift back up the curve. Does that make sense?
Yeah, it does. And does that bring buyers from other neighbouring suburbs that didn't perceive that they could potentially afford to get into that ring, whether that's from Coolbellup or Hamilton Hill, Hilton, Spearwood? So I think it's a never-ending cycle, isn't it, of affordability and attraction that you're talking about.
And I think that's the great part about Melville is it really does sit as the junction point between those preferences of affordability to get in the area versus what can I afford in the area as with regards to amenity. Another thing that affects people's preferences to come to your space rather than maybe closer to Applecross, Bateman, Brentwood area is the school zone. How's the perception on Melville High been going? Because we know that 5 years ago it probably didn't have as good a perception as, for example, Applecross.
From all accounts and the families that I talk to in the area, the perception of Melville Senior High School improves each year. They've got some really great specialist programs that they run through there. And it feels like the percentage of families that live within the city of Melville that are utilising that as their main public school catchment is going up, albeit slowly. It's also important to remember that that catchment is big. So it includes not only Melville, it includes Willagee, it includes Adelaide. With Adelaide being a big suburb, it includes Palmyra, Alfred Cove, and also Myrie. So you've got 6 or 7 fairly large suburbs that are going to feed into that school. I'd think probably percentage-wise, I have to recheck the numbers, but you're still looking at about 60% of families that are outsourcing high school within those suburbs. But as soon as that number, I think, gets down, certainly under 50%, you're going to see the desirability of that public high school go up even further.
Yeah, well, it's chicken and egg, I think, for a lot of people. When you think about that profile in Melville specifically that are using Melville High School as their education source, has that progressed over the last 5 years?
Yeah, it has progressed. And I think looking back to the podcast we did many years ago, and I labelled Melville a little bit of an Anglo suburb, that has actually shifted a little bit in the last few years. Certainly seeing a lot more families that would typically be looking at schools like Applecross and Rossmoor and Willetton actually moving into Melville, buying in Melville and referencing Melville Senior High School as a reason that they're coming in. They're not so typically the families that have grown up in Melville and moved out and are coming back, but more families from areas like Harrisdale, Canning Vale, where they might have sent their kids to primary school in those areas, then migrating to Melville for the secondary school education.
Well, that makes a lot of sense, and I think that's what we're foreshadowing today, is this is going to be a location that as interest rates start to drop, people start to move to from those places you were talking about. A lot of people right now are being limited to the fringes based on serviceability. They're creating equity day by day on the fringes in their houses. That equity will be usable as interest rates drop to transition out, upsize into these more desirable places that centre around Melville, for example. And I think that's where we're going to start seeing Melville win in the local game compared to the less desirable suburbs in the catchment, simply because it is a place that a lot of people historically would like to live if they could afford it. Development. 5 years ago, development was kicking on. It was fairly newly rezoned around Rome Road, Kitchener. We do know, however, that the median density code has made it a lot harder to make a lot of this work. We know that there wasn't a lot in the first place available from the city of Melville. What's the feeling on the ground on the street? So you're seeing many bricklayers out at work at the moment compared to 5 years ago?
Oh, look, 5 years ago, development sites were highly sought after, and they still are highly sought after, but previously they were highly sought after and largely purchased by developers as opposed to mum and dads or young couples looking at large blocks to retain the old house and make something of it. Certainly for 3 to 4 years from 2020, really only up until the middle of last year to the back end of last year, the developers that we've very actively worked through side by side to find sites and also on sell the built product were very dormant. And I can only put that down to construction costs. And certainly in the last 12 to 18 months, the construction costs seem to have stabilised. As we mentioned before, not gone down, but stabilised. So it's easier for the guys to run their numbers on what they're paying for these sites and then reselling them for. Another part of the process that's made it very difficult is that a development site that you might have bought in 2019 not dissimilar to every other product in the market, has gone up significantly. So if you're paying $1.4 million for a triplex site in Melville, you're running numbers on 3 single level dwellings that might have cost you $300,000 to build before, and they're now costing $500,000. The margins are pretty small. Have certainly noticed the last 6 months that shifting, but it's been a slow shift.
Sales prices, have you seen a lot of data, especially resale data on similar stuff with those basic 3x2s and or townhouses in Melville, where you're starting to hit some new records? Because you have to be hitting records, otherwise this stuff doesn't stack up, as you're foreshadowing.
Yeah, look, it has had to, and it's been a bit of an exercise of holding your breath and seeing whether we can crack those prices to actually make it worthwhile for these guys.
So a bit of hope money is the people who have been developing recently.
Certainly not many developers are willing to throw hope money at anything. But for those developers that were lucky enough to buy a site 3 years ago and take some increased element of a risk over other buyers, it's really paid off. The triplex price point, as you referenced, 4 years ago for a single level 3x2, you'd be looking at anywhere from mid-6s to mid-7s. The last 6 or 7 that we've transacted have been from mid-8s to mid-9s, and that's been across Melville, 2 development sites through Willagee. We just sold 3 in Burragoon, still in the city of Melville on Risley Street, which all ranged between $850,000 and low 9s.
You multiply that by 3 of them, we're talking extra $500,000-$600,000 in revenue there. So you'd like to think that it starts to make these projects surprisingly at least marginal. But what it has done, as you said, for some of those guys who bought in 2020, started building, suffered through 3-year build time frames, they were thinking they were maybe going to come out with 150, 200 grand profit. There are some of our clients who have come out with $900,000 in profit. I mean, this just blows your mind. That leveraging into the growth of this market over the last 4 years, what that has achieved for mum and dad individuals on incomes that are nowhere near. And so this is a life-changing numbers that these people are making.
You'd like to think it's all calculated as well, but a lot of it's been
most of it's luck,
down to a bit of luck and the construction time blowing out and it just playing in their favour.
You got to be in it to win it, I say. Let's have a chat about those pockets in Melville and where people are voting with their feet right now at home opens. You sell across the whole suburb. You've probably sold on most streets in the suburb. Where are you seeing the most pressure? Is it in a location? Is it in an estate? Or is it in a price point? Or is it in a housing type in Melville?
I think really it's in a housing type. I think over the last couple of years, with the lack of supply and choices that buyers have had, it's been intriguing to see the pockets of Melville, and it'd be no dissimilar in Willagee or Palmyra or Alfred Cove. Each suburb has got pockets where we think we're going to potentially achieve more, or pockets where we think, based on previous sales and amenities and tree lines and surrounding properties, it's going to be less. But really, that's gone out the window to a point where if you've got a property to sell in a good suburb, even if it's in a pocket that's not so attractive, you're still going to get great money for it. In answer to your question around what's the most desirable product at the moment, it still really goes hand in hand with the majority of those that are buying in Melville, which is largely mature families. There's been an absolute dearth of family homes on blocks that are above 600 square metres. You could name all of them that are sold on one hand in the last 18 months.
So I guess people just not willing to move?
I can't look many families in the eyes and say, sell your house before you know where you're going. So it's the same old adage that everyone's been battling with in trying to unlock this chain, but that particular type of buyer, even more so, to create any level of uncertainty around where the family's going to live is really unsettling and hard to convince people that they should do it in that order. So as a result, that part of the market's been paralysed.
Do you see a lot of pressure, cheapest end, just pushing prices up? Think about the cheapest thing you could buy 5 years ago. Has that come a lot closer to the median? That's
probably the most frightening, I think, part of the market within Melville and the surrounds is that the entry point, there always used to be I think, an achievable entry point. It just involved someone compromising on how nice their house was. But to get into the area, you could get in there. For Canning Highway, you could get a 2-bedroom unit for $300,000. That product now is close to $500,000. 2-bedroom unit in a group of 10. We've just sold one for mid-7s. And these are units that are 30, 40 years old.
They're just sold it. Really, aren't they?
Yeah, and a lot of them haven't been renovated. So compared to, we say 4 years ago, but do you know what? It feels like it's almost compared to 2 years ago, even 18 months ago. The level of growth, and none of this is forever, we know, but the level of growth that we've seen at the entry point of the market in Melville in the last 18 months has been incredibly strong.
And you speak about none of this is forever, and obviously there will be a time where the supply of property generally in Perth starts to meet the demand, or demand as a function of worsening conditions in our state economy and or just immigration slowing down, starts to abate and things balance out. And Melville's never going to be answering all those solutions, right? It's a brownfield suburb. It's got marginal levels of supply increase every year through small-scale development. But for me, what we've seen over the last 18 months to 24 months has just been a national rebalancing of the value of our property, which has been fueled by cost inflation in replacement, which has slowed increase in supply down across Perth. And now it's a case of, well, hey, what does Perth have to offer? New people coming to the state versus Melbourne versus Brisbane versus Sydney. There's an equality that's come back to our market nationally, and those people looking internationally as well. But also this will be impacted, as I've spoken about before, by people just artificially becoming richer next year with interest rates dropping. At a time when the East Coast is essentially knackered, Melbourne is knackered, Sydney house prices are causing cost of living to be at levels that we couldn't imagine with similar incomes. We're going to see that relief through cash rates dropping sometime between November and March next year, we expect. That affects us in an inflammatory way at a time when we probably don't need that. We're probably a fairly balanced outcome right now. Mortgaging and possession numbers are as low as they've ever been. What that does is it adds fuel to that fire. And the conversation you had with me today about, geez, I can't believe we're at a 1.2 mil for a family home in Melville. Well, those people who can afford 1.2 mil today, they can afford 1.4, 1.5 by the end of next year. They're the same buyers looking for the same dearth of properties not available in Melville. So they'll probably pay it if they have to.
They are already in some instances. Yeah, I think listening to what you're saying there, it just made me also think, well, the people that have been buying over the last 4 or 5 years, very few of them in Melville are investors. Of the 40 properties in Melville that we've sold in the last 12 months, probably 2 of them have leased them out, and they've leased them out short term to move into. So when you've got such a low percentage of properties that are being bought with the investment eye.
Yeah, that pragmatic return eye.
It takes serious life changes or financial pressure for people to release them at a loss. So even if we did have some shift out there economically that caused things to tighten up, I really don't think it's likely to affect probably 90% of the people that own property in Melville.
Advice for those people right now who are looking in the area, struggling, probably compromising right now to a suburb that's not Melville or to a house type that they weren't expecting to have. How do they put their foot in the door, give themselves an opportunity to get Michael Jennings to put the offer in front of his vendor on the weekend? Practical ideas.
As a snapshot, the last 6 weeks, we've probably seen somewhat of a drop-off in numbers and the ferocity in the market and the anxiety from last year that we were seeing. But we're still, in most situations, having 3 to 4 genuine, solid, well-financed or cash offers. In the last 12 months, we've probably kept 3 properties on the market for more than a week in Melville. And that's not from us trying to hurry the process. It's just from the organic process that happens when a property goes on the market. So there's no silver bullet or magic wand.
Come prepared, come with confidence, come with experience, come with a pre-approval or cash terms is the standard minimum at this point in time.
Yeah, and I think the psyche is interesting. So I think buyers have changed their psyche a little bit to possibly, if they were a buyer that was looking at a different suburb that had a higher median price point to Melville. I think we all are now looking at these suburbs and envisaging the future and envisaging that these are all destination suburbs, and Willagee being the best example.
You just spoke there before about the frenzy coming off in the last 6 weeks. Now, we've noticed that in Stockholm market ticking up just under 4,500 properties. I'll note that still less than where it was at Christmas time and this time last year. We're still in the record lowest year that we've ever been in with regards to Stockholm market. But to use Melville as a test case, you said it's not investors, right? So it's not like the East Coast pulling out of Melville. They were never really in Melville. What is it right now? Do you think it's everyone taking a breath for a second to go, holy, I'm paying 1.2 in Melville for a median house price, and just having a look around for a second before they commit?
Yeah, I think it is. I think there's an adjustment, which is a little bit like the calm before the storm. I'm not necessarily a subscriber that thinks we're going to have the same level of growth in the next 12 months that we've had in the last 12 months. I think that would be unsustainable. But I think we have to look at all suburbs across Perth, and you know this better than anyone, individually as opposed to a whole. And the supply that we're seeing, or the increase in supply that we're seeing in some outer mortgage belt areas, in some northern suburbs, when you compare that to pockets like Melville, which are predominantly just locals transacting, upgrading, downsizing, we just don't think we're going to see the groundswell of stock. And without the groundswell of stock, you don't have the price pullback or the choice that affords buyers time and space to negotiate hard.
Well, that's why we call them blue chip suburbs, right? Even when the frenzy pulls off a little bit, the breath is taken for a second, there isn't that response by the seller's side because there isn't the desperation. There isn't the requirement to sell in a week versus 3 weeks or whatever it is, right? There isn't the financial pressure. There isn't the investment returns pressure either. You see that in, for example, Wembley Downs, one of the only suburbs in the worst times in Perth's market 10 years ago that never actually dropped at all in any year when everyone else was regressing because the local sellers didn't need to sell at a price they weren't happy to sell for. Melville, I would say, is coming into that same space where pretty solid people, probably at LVRs 50% and lower a lot of the time, in between 35 and 65 in their age, so aren't compelled to move this week versus next week. So what you see is essentially ebbs and flows. You see periods where people get to price records, buyers take a minute to think, but in no way are we seeing people say, oh, Michael, drop the price by 100 grand. We'll just wait an extra 3 weeks. Someone will come at that price. And then something comes to change the dynamics of the market. And in this case, what I am foreshadowing is interest rates dropping. That is the bluff being called right there, right? These buyers will be able to pay more. They still want to live in Melville. They still need the family home. They can't compromise down to a 3-bedder when they've got 3 kids. So they'll just pay what the bank will give them to pay.
We had 2 properties in the July-August period that sold in the $2 million range in Melville. So we had a property that transacted for 2.5 and one that transacted for 235. And when you've got residential properties selling in that price point, what it also does, it gives the buyers confidence that are paying 1.5 to 1.7 for a product that they would have been paying 1.2 for 4 years ago, that it's actually good buying.
Yeah, it still sits in that hierarchy, and the hierarchy has just shifted all the way up to the top. At the price points that were reserved for the best parts of Adelaide a couple of years ago. Congratulations on the move to Haven. Good luck with all of that. I'm sure it won't change much about what you're doing on the weekends anyway. Same agent, different brand, but it sounds like a fantastic move with Shane Beaumont, who's a good friend of the podcast as well. And we look forward to having you on again, probably a little more regularly than once every 5 years.
Thanks, Trent. Thanks so much for having me.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!